Good afternoon. Markets are enjoying a nice rally today, although the tech sector is lagging just a bit. Of course, the big news this week is the Twitter IPO. Twitter is planning on going public with a $1.6 billion offering and pricing its shares between $23 and $25. But what should investors do on the first day of trading? Well, T3's Scott Redler is here to tell us. Scott, you survived the first day of Facebook trading, so what suggestions do you have for Twitter?
Well, we have a strategy or technique to measure supply and demand on whether or not it's approachable the first day. We love to trade new issues, but some there's opportunity and some are just priced wrong. You know, Facebook, like you just mentioned, they raised the price 2-3 different times. They issued more shares. They delayed the issue and it opened up and never went back above the opening price and failed. So it was in a void. Whereas LinkedIn, maybe the cousin of Facebook, opened up at 90, absorbed all the flippers of supply, traded over that opening price, and went to 115, and then had a more of a run that was cleaner because there was less baggage like Facebook had. So tomorrow, we're going to use the art of the first day to measure whether or not it's tradable for opportunities if you're not involved in the deal.
All right, so is there a number you're looking for? Is there a level that you're going to say, guys, stay away?
It's not a number or a level, it's a technique. So the way I'm gonna look at it, I'm gonna have 3 different strategies, A, B, and C, because nobody knows where it's gonna open up. Some people think it's opening up north of 40, some people think 33, some people think 29. It's not even priced yet.
I mean, it could even go crazy and like start at like 75. I mean, it could get priced at 25 and then first trade out of the market is 75.
I kind of doubt that, but it could happen. No one thought that LinkedIn was going to open up at 90, and then if you shorted it there, it went to 110. The bottom line is this is what you do. We're going to be trading it on the virtual trading floor so people can follow us, or you can write this down. When Twitter opens up tomorrow, you write down that opening print. Typically in the first 5 to 15 minutes, everyone that's involved, the free money guys that get it from the IPO, they start selling it. So just say, for instance, it opens at 35, goes to 36, and then trades down to 35, 34, hangs around there because all that supply has to be met by demand. Then all of a sudden it gets back to 35. Now it's more interesting because the supply is getting absorbed. Trades above 36, that's when traders are going to jump on it because that means there's more demand than the supply, and then it can go maybe to 39, and then you can make money if you're not in the deal. But if it opens at 35, goes to 36, goes to 34, then goes to 33, then goes to 32, comes up to 33, goes to 32, and never gets back above that 35, 36. There was too much supply, they raised it too high, and there's no opportunity that first day. And then you avoid it, and then you wait for a better technical setup in the weeks to come to enter, kind of like months later. Facebook, you could have entered in the 25s and still made a lot of money. You just couldn't make much money the first few sessions like you could have in LinkedIn because it was properly placed and priced.
All right, well, it is definitely going to be an exciting day tomorrow, but you know, Twitter isn't the only tech company going public this week. Network storage company Barracuda went public today. Barracuda priced its shares at $18 and the stock traded up to $22. I spoke with the CEO BJ Jenkins on the floor of the New York Stock Exchange shortly after the stock began to trade, and I asked him about the tough competition in the storage sector.
We focus on a really underserved part of the market, which is the mid-market. It's customers who are 100 employees to 5,000 employees. Most IT companies build for those really large enterprises and complexity enters the equation. We really build for that mid-market customer. We give them a real powerful but easy to use, simple solution, install in 15 minutes and get protected.
All right, so how do we explain then that you had some net losses for fiscal 2013? Tell your new investors how that happened.
Yeah, we are a SaaS-like model. We provide infrastructure as a service. So we actually have about 70% of our revenue is subscription-based, and we take all of our period expenses up front. So cash flow is one of the things we looked at for profitability, and we've been cash flow positive since the 3rd month of existence, and we continue to try and grow our cash flow.
All right, so why the losses?
Losses, when you look at it on a GAAP basis, we defer all of our revenue and take it ratably over time, and we take all the expenses, the period expenses up front.
What is your subscription renewal rate like?
96% for the first half of our fiscal year on a dollars basis, and so it's strong. We give a unique experience to Barracuda customers. When they have a support issue, they call, they get a live person, no phone trees. When they get our product, they get a 30-day right of return. Our products are simple and they sell themselves. And so we make that encounter with Barracuda really nice, seamless. There's not a reason to leave us, and that's why we have that high renewal rate.
So what is going to be your main goal this year now that you've gone public?
We've introduced 5 new products over the last 12 months, and one of our goals is to create Barracuda shops. Customers who deploy 3 or more Barracuda products. Over the last 3 years, we've gone from 1,000 of those shops to 5,500. We have 150,000 customers, so we think there's more products to be sold to those customers and make them Barracuda shops.
How did you come up with the name?
Actually, the 3 co-founders came up with the name, and they always envisioned a company that served this mid-market in a special way across multiple product categories, and they looked for something aggressive that would resonate with that customer base, and that's how Barracuda came to be.
What has been the experience for you to be going public the same week as Twitter?
Well, we're glad Twitter waited for us to go public. That was, it's good because there's a lot of focus on the markets, a lot of visibility to those companies coming out. So there is a Twitter effect for us where more people are paying attention to companies coming public right now.
All right, well, it is always a great time to go public when the markets are up, and that was certainly beneficial to Barracuda. That's it for the Tech Report today. Of course, tomorrow we'll give you full coverage of Twitter's IPO. I'm Deborah Borchardt, reporting for TheStreet.